Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. Much as Chicago and Kansas City wheat, this market is a story of three patterns, though not necessarily channels. Firstly, and the largest, is the late June to early September bear channel that morphed into a descending wedge pattern. Then there is the dark blue highlighted early September to mid-October expanding wedge pattern. And finally, the most recent and shortest pattern at this time is the dark blue highlighted mid-October to date bear channel, currently 212 to 223. That together with the expanding wedge pattern made a V-top pattern together. Unlike some of the other markets, prices here are still progressing down this newest of bear channels without much of an extension or handle, dipping below the significant medium moving average, currently at 227, and the gold long moving average, currently also 227, and starting to stabilize below them, though I note today the break above it, so I may have to reassign some of those, the upper channel line. We have significant supports further down, specifically the May 23 low at 221, especially the 50% absolute Fibonacci line at 219. However, prices have done some pretty good work breaking all the moving averages, currently between 227 to 231, with a potential pattern developing, which I'll discuss shortly. But first, for the early September to mid-October rising expanding wedge pattern, we have some potential targets below the market. They are still alive and outstanding. A primary target X in the 217 zone, and a secondary hard to reach target X1 down in 208. Interestingly, I suspect the best supports for this pattern are from where we are now down to the 50% absolute Fibonacci line at 219, and that it might well be easier to reach target X and target X1 should prices manage to drop below the 50% absolute Fibonacci line. We'll see if this comes about, should prices venture down that far. Going back to the moving averages, and it is a potential pattern that we are on the eve of possibly making. A bow tie formation from the declining short medium moving average, currently 227, the declining medium moving average, currently also 227, and the flatlining gold highlighted long moving average, currently 227 as well. It is not appropriate or really even accurately possible to discuss the possibilities for this pattern, but suffice it to say it looks bearish right now, and the moving averages are in the right order. Minneapolis wheat. The market here is a little different when compared to Chicago, Kansas City, and even Paris wheat. You see, the core pattern, recent pattern, is a very large one, a sideways expanding wedge pattern, highlighted in dark blue on my daily chart, currently at 556 to 692. This pattern is still alive, and there is also a much larger pattern, one I've been discussing in my commentaries here for months. A descending expanding wedge pattern, currently 647 to down well off the bottom of my daily chart. The upper trend line has been escorted and reinforced since at least late last year, though not very well I have to say, by the declining long moving average, currently 650. I've kept this breached, large, original descending wedge pattern still on my daily chart as the others that were here originating from August, September and October 2023 through to April 2024 have all been thoroughly broken, and this is the largest, is still here, even it was previously breached. And it's more as a just-in-case situation. Going back to the market action, prices turned higher from a small V-bottom in late August, prompted by the purple highlighted September 2019 to date uptrend, currently at 598, into a early September, mid-October, scrappy-looking, ascending, expanding wedge pattern. Unsurprisingly, this peaked in mid-October and was capped by the combined upper trend line of the expanding wedge pattern. It was also the neckline to the inverted February to June head and shoulders pattern, thus turning lower and creating a bright red October to date based bear channel, currently 583 to 619. This turn lower did not quite have the integrity here for a V-top as seen in other wheat markets, but the bear channel still looks good despite some hesitation over the last week of October and the first week of November. However, this week patterns punched lower, dropping down through the October 2018 high at 611, the April 2021 low at 606, and importantly down through the purple September 2019 to date uptrend, making their second consecutive close below it yesterday. What is more, the outstanding potentials below for the September to October based small ascending expanding wedge pattern of the primary target X in the 596 zone with a secondary target X1 down in the 563 zone, well, target X was achieved this week. It is only the bright red lower bear channel line and some congestion at 579 that stands in the way of testing down to the August low at 563 and to target X1. Now, one final point. I said last week, and I quote, "You may argue with me that I'm being overly generous on the downside, and at most the secondary target should be down in the 604, 605 zone, rather than both being below 600. And to be honest, I can see your point. However, I'm minded to measure from the base of the late August V bottom for now, though I would thoroughly see your point and be corrected if it comes about that we cannot move down below the purple uptrend." End of quote. Well, this point is all moot now as we are below the purple uptrend. London UK feed wheat. Until this week, there had been two competing patterns here on this daily chart that were fighting for the future of this commodity. There was the original, significant, early March to late June bullish Andrews pitchfork with a combination, shift pitchfork, with the combination of the lower time, currently at 180.55, and the flatlining gold highlighted long moving average, currently 179.05. To be honest, prices have been testing these supports, or at least threatening to test these supports, since late August. Then there is a now more significant recent pattern, the bright red late May to early July bearish shift pitchfork, with the market right now in between the upper time above, currently at 188.80, and the middle time below, currently 171 even. Now, I've said for months that the gold long moving average and the lower time of the bullish shift pitchfork were the last bullish orientated supports I had in this market. And last week they were broken down through on the downside with some further exploitation this week, though not by much. So, looking at the recent actions, what may turn out to be the key feature here was the island top over early to middle of October with a potential target X below in the 169.90 zone. This island top led to the purple highlighted October to date bear channel, which we are still well within, and that's currently 170.85 to 178.85. I voiced some doubts about this bear channel, but I said I would go with it until something better comes along. As for target X, well, it did look a little optimistic when prices were above the broken lower time of the bullish Andrews pitchfork and the gold long moving average, but as I said last week, and I quote, "That is because I'm looking at it from the perspective of being above both the dark blue lower time and, well, that was the bullish, the lower time was actually dark blue, being a dark blue lower time and the flatlining gold long moving average. Should these two give way, then it would gather a completely different perspective. So it is important to see if the last chance bullish supportive pattern manages to hold up repeated attempts at breaking lower." End of quote. Right now these two have not managed to do so. So next look to the bright red middle time and the purple lower bear channel line instead as potential, if declining, supports. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Service International Limited. And here comes the final important bit.